The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhosed.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 3rd fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply tools each of us need in order to lead an inspired life. Because truly, folks, leading an inspired life is what it's all about. So let's go look at one of our tools. Hope everybody out there, if you're in the Northeast, you are staying warm. Well, it doesn't matter where you're at. If you are traveling because you have been traveling for the holidays, you're bound to run into delays out there. Just take it nice and easy, relax. You'll eventually get to where it is that you're going to. And you know, that's a pretty good way to kind of move right into the tool that I want to look at today, and that's called dedication. Dedication, folks, it's an attribute of success. And I really do think it's apropos for a number of different reasons. How about for those of us that made a commitment to a New Year's resolution? And, of course, by day 3, maybe you've already experienced a slight setback out there. You know, I believe one of the most important things we can do in life is to model others. And more than just others, folks, model the best. And then take what you've learned from them and make it better. Yes, learning from others is an attribute of success. Think about it. Think of all the great athletes out there. You think that they model others at first? I know they do. You absolutely want to model others. Doesn't matter whether it's an athlete, whether it's a pattern trader out there, whatever it is, go find, maybe it's a teacher, go find somebody that's successful, that you say, hey, I'd like to have a little bit of their stuff, and then go take it, and then go make it better. Because that's really what it's all about. That's the type of dedication that I'd like you to have. For example, Thomas Edison, he once said, genius is 1% inspiration and 99% perspiration. Now, you may not have known where that expression came from. Now you do. Or at least that's who I'm giving credit for that statement. You see, Edison, he was never discouraged, and when he didn't get results, even after countless attempts, folks, in fact, there was a time when a friend consoled Edison after his repeated failures to make a storage battery work, and Edison said, hey, I have not failed. I've just found 10,000 ways that it just simply didn't work. Now that is a great outlook for someone determined to achieve an outcome, and I know that includes you. You know, in Edison's later years, he was asked how developing deafness was affecting him. He said, hey, I find it easier to concentrate now. There are most certainly times where I feel like that as well. It's always good to have a good sense of humor, especially if things aren't going your way. Look, let's always remember that when we pursue a goal or an outcome, we're going to encounter setbacks. I mean, you ought to plan on it. If you plan on it, if that becomes an expectation, hey, no problem. Makes it a lot easier to get through. Remember, remove that barrier of perfection. Look, if you set out to lose a little bit of weight, and last night you were watching the Oklahoma-Alabama game, depending on which side you were on, and you decided that you wanted to have some chips, well, then you had some chips. Don't have them anymore if what you were trying to do was to lose some weight out there. Folks, you're going to have setbacks, and the key is not to let that setback get you down. You know, there's countless men and women throughout history who've achieved critical success only after trying, then trying again and again and again. And you and I, we just need to be able to do the same. So dedication, folks, be dedicated, because it is an attribute of success, and you are an extraordinary, successful individual. Be dedicated, be committed, and guess what? You will get there. Well, let's go see where these markets are getting to. You know, today, really important day in the markets. We've seen a bit of a bounce inside of the futures market. I say it is nothing more than a counter-trend rally. Time will tell, but right now, look, on Tuesday, as I pointed out in my newsletter, I was smelling rats. Pointed out those rats, and boy, those rats came to fruition yesterday, big time. What we're seeing here this morning is just simply a counter trend rally at the moment. We'll see if it can turn into something else. And it's important because of the down day that we had yesterday. If, in fact, this is a rally that gets sold, there's one more indication that what we are seeing is the beginning of a change in trend. How long that's going to last? Well, it's going to last until it lasts. But one thing is for sure, we're seeing that this is important. You know, it's going to be a slow trading session, or should be, with all of the blizzard-type conditions up in the Northeast. Hope everybody out there is safe. Hope you've got electricity and heat. And just stay in. If you're not traveling, be thankful. Be grateful that you're not traveling. And if you are, maybe a little hot toddy might work. Look, somebody's going to cut you off. Somebody's going to do something that they probably ought not to do. Just let it go. If that's what made them happy, then give them that gift out there. Just know that you are a better person. Well, let's go check out these markets out here. We got the euro pulling back a bit. Goldilocks is trading up $4 at 12.29. An important day in the metals market. Silver's back about 3 pennies. It's trading at $20.09. Light sweet crude down 20 cents right now, trading out at 95.23. Natural gas back about 6 cents. It's trading out at 4.26. If we take a quick peek around the globe last night, boy, talk about getting the kibosh out here. You had the Hang Seng off 522 points, off 2.25%. The Hang Seng and the Hang Seng actually moved, and we'll take a look at it. It's moved right into or close to the bottom of a rising price channel out there. The Shanghai off a little over 1%, 1.25%, down 27 points. The Nikkei trying to blow off the move lower in the marketplace. It was up 112 points, about 0.7%. Over in Germany right now, it's up 31 points, 0.3%. The FTSE up about the same, 18 points, nearly 0.3%. Our call-in number is 877-927-6648. Give me a call. We can take a look at your stock chart. Of course, the one that we're looking at on our screen, if you're watching us on TigerTV, thanks so much for doing that. If you are listening on the radio or your mobile device at TFNN.mobi, we really appreciate that. Remember, you can catch the live stream of this show here by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone devices. Click on that button. The show will stream live, and, of course, the archive is on Channel 9. We're looking at yours and mine, our favorite currency pair out here, failing miserably. This is the 30-minute chart of the euro, Japanese yen. Why is that important? Because the correlation is still intact out here, and that correlation, it's a directional correlation, better than any other correlation out there that I am aware of with regard to the direction of the marketplace. And when we were taking a look at yesterday morning's move, into the 11 o'clock time frame, we saw price moving down into the rising price channel. On the 30-minute chart, this is a rising price channel that takes us all the way back into the lows that we saw in the marketplace back in the November time frame. Here we're taking a look at the November 7th time frame. That price channel has not been broken, had not been broken up until yesterday. Now, as it was being broken yesterday, we saw first price had moved down into that extreme oversold condition that was coming in at 10:30, so 11 o'clock, 10:30, we were saying, hey, look, this thing is going to bounce, needs to work off that. It's just a pressure thing. It just works like that. So it worked itself off, had a nice little wide-ranging bar, and then what it did, coming into the time frame of about 2:30, excuse me out there, coming into the time frame of about 2:30, 3 o'clock in the afternoon, it was making a lower low, and it was doing it on what? It was doing it on less relative strength. Now, it's a 30-minute chart, and these price RSI divergent patterns, they are something to behold. They're something to be paying attention to, because it is not normal for price to make a move lower and do it with less relative strength. When it does that, it says, hey, the move is not real, not at the moment. Well, it proved to be the point, not real, and what we saw here was a sideways consolidation. Price moved up, tried to get back into the consolidation zone, and no, it could not. In fact, it rejected that consolidation zone at about 8 o'clock last night. Our markets here were bouncing up at about 8 o'clock. I was watching the screens, and so what we had out here was a rejection of that area. Now what we're going to be paying attention to here is there was a little hammer candle that formed at about 1 a.m. And at 1 a.m., no sound. No sound. Alberto, what are they saying? There's no sound out there. Alberto, what do you say here? Let me see if I've got if there's any other problem out here. I don't see a problem out there, so my apologies if... okay, great. So we got it. Okay. So what we're going to be taking a look at here... So I see one person says no sound. How about anybody else? Anybody else out there? Hate to keep going forward here, and sorry about doing that during the live radio show. Any sound? Good here. Okay. All right. So must just be a problem in some areas of the market. So now let's get back to the hammer candle. It came in at 1 o'clock in the morning here. And this is a little hammer candle. Hammer candles are 1 day. It's signs where the bulls show up, and that came in at 1 o'clock this morning. The low there on the Euro Japanese yen, that was at 142.07. You can see you're already coming into that with a fairly wide-ranging bar. It's really a good indication that the bounce that we saw here this morning was a counter-trend bounce out there in the marketplace. So that's at least what the Euro-Japanese yen is saying on a 30-minute chart out here. Let's go take a look at the 30-minute chart now. What I was looking for is, hey, could the ES Mini, my apologies, bounce up to about 1837? Looked to me like maybe that was one of its outcomes, that it would try to head to that perigee line right around the 1837.75 level. So far, what we've seen is 1.272 expansion of a set of swing points. That's the swing point. Coming in at 9 o'clock last night, out at 1829.50, down to the low at about 2 o'clock this morning. Again, this is a 30-minute chart that we're looking at on our screen out here. So this is really, really, really important trading session. The light volume doesn't really matter. It's really what happens with regard to the to this little counter trend rally. Is that all that it is out there? And that's really the signals that you're looking for. Look, if you're long this market, daily, weekly, if you're long from your long-term accounts, just stay put. Okay, because those trend time frames have not changed. They're not even in jeopardy, quite frankly. The daily time frames here, the trend is still strong out there. It's strong, but cautious. We'll take a look at some of those caution signs. We looked at one yesterday. That's called the Island Reversal in the New York Stock Exchange. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhosed, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not a ton moving in the pre-market out here. One ticker symbol, RFIL, RF Industries. They closed at $8.86. Now, that thing is getting the kibosh this morning. It is trading out at $6.68 last trade here, firing off their Q4 revenues, 8.4, so they fell short, 8.4 million versus 9.3 million out there. I don't know that I've got the profit number out here. I don't have the profit number, but they are truly getting hammered. You've got T-Mobile Systems, TMUS. They closed at 33.37. They're trading out at 32.68. No news behind that. Micron Technology trading down a bit, closed at 21.60. Trading out at 21.20. No big deal out there. Twitter to the upside this morning. Not by a huge, well, by a couple bucks. Closed at $67.50. Last trade here, firing off at $69.10. We see Medtronics is up. MDT, it closed at 57.25. It's trading at 58.05. Yahoo is up a bit. Closed at 39.59. It's trading out at 40.18. And I mentioned the island reversal. Let's come back to that in a bit here. Let's take a look at the Dow. Now, I put the continuous contract up on my screen, just simply if I go take a look at the current March 2014 contract. There's not enough data there to really be able to draw the proper rising price channel. So let's just take a look at a blank chart out here. And it's a 120-minute chart that we're looking at. So I'm really focused in on the 120-minute charts here at the moment because, as I said, on the daily cycles, the daily time frames, weekly time frames, the monthly time frames, they're all intact. There's been no real, well, there's been a topping pattern out there, but from a trend is your friend standpoint, there has not been a change in trend in any of those time frames. So that means we've got to come down a little bit lower under the covers to start to try to identify, hey, how real is yesterday's move, which is real, folks. It's absolutely real. We'll take a look at, some of the indicators out here. But I want to take a look at the Dow. In fact, I'm going to take a look at a blank chart, show you what I do. That way, if you're following along at home, now this is the Dow futures that we're looking at. Again, it's a continuous contract. What I want to first draw in here is the rising price channel. So I'm going to come back into where I see the lowest low of significance out here. We know that the Dow was consolidating for quite a period of time, and really the bottom of that consolidation where it then broke out of was back in October 9th, 2013. Now what I'm going to do here, I'm going to take a line tool. I'm just going to come to the actual bar open. I'm not using the bottom. I'm not using the extreme emotion of the bar. I'm just using a price channel versus a trend line, and I'm just going to use this line tool to try to identify identify, where are perhaps the largest number of co-located opens and closes, something that looks logical. And it looks to me like the touch point to use out here. I'm going to actually extend this back. It makes it a little bit easier for me when I actually draw the price channels. I'll show you that in a moment. So I'm just using the actual open from about 7:30 in the evening, and that's on December the 12th out there. And we can see that we had a number of different touch points out here. You can say, yeah, it broke through that price channel, and I think I know that if we put up the relative strength indicator, which I'll do here in a moment, we'll see that it was also probably in the extreme oversold territory. So I think that is a pretty good level. It also happens to be where on the Ben Bernanke day, December 18th, price had pushed down into that area, and that level held. So I think that's a really good, strong, rising price channel out here. So you can see I extended it back a little bit further. I'll scrunch it a little bit. That is a technical term that us chart pattern folks use. And now for my price channel, I've got a line that I can start this on. And, there's the bottom. I'm not going to focus so much on the top of the price channel, but it's probably somewhere right around this area here. It's really right now what we want to be paying attention to. We want to get the bottom of that price channel correct. And so I think that is that's it. So you can see we're quite a ways away from the bottom of that price channel out there. That's why I say on the daily time frame, we haven't really seen much of a, there are some significant issues to contend with out there. But on the 120-minute chart, if we see a break of this level here, can't tell you where price is going to come on that, where that break would be. Look, a normal thing would be to go from the low of Uncle Ben Bernanke Day up to the high out here that came in. This was on December 31st, and first your dead cat bounce, your .382 level, 16,238. Most likely, the bottom of that rising price channel gets tested right around the .618 retracement, right around 16,051 out there. So that's your .382. Now I can also apply the primary trading range boundary lines on this. I'm going to move this as far right as I can. I've got a little button here that I've created, a little bit of a little tool out here that automatically goes out and it takes the data and it calculates and identifies the largest number of co-located opens and closes. It looks for horizontal support and resistance out here. It looks like I'm going to have to go ahead and complete this process after we get back from this next breakout here, which I'll do. That way you can kind of follow along. We'll start with a clean chart. We'll focus on the Dow futures contract out here. You can see the primary trading range boundary lines out here that the system automatically calculated. 16,389 right now where we're trading into. 16,542 was the upper boundary line. That's what the Dow futures hit on Tuesday. Be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
2014 has arrived, and Tom O'Brien has put together a special webinar for subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of the special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 37 points. It's trade out at 16,478. S&P up about 3 points, trade at 1834. Composite up 3, trade at 4146. Russell 2000 up 2.5 points, trade out at 1153. Apple to the downside off $3 right now. Leading the charge the upside, you've got Tim Participakos. Boy, I don't know what the, that is TSU is the ticker symbol, up 7%, trading up $1.93 right now. Twitter up $1.37. You've got China Financial Online. What is that? That's up 23% here right now, up $1.29. They reported revenues of $13 million versus 7.2 out there, so they're trading up nicely. To the downside, Apple leading the charge. RF Industries slightly behind them. Apple's off $3. RF Industries down 2.25. Of course, that's off 25%, so that is not a good thing out there. Herbalife off $1.38, Baidu down $1, Joy Global off $1.40, T-Mobile down $1.17, American Express off 59 cents. Not a big deal out there. So let's go back. Take a look at the Dow futures. That's what we're focused on right now. They're trading out at 16,427. In the marketplace. Now, what we had put on the screen here, we put on the chart, I should say, are the primary trading range boundary lines. These are, the tool that I've built here goes out, automatically identifies first the largest number, the largest area on the screen of co-located opens and closes, and creates a little dark line out here. That level is right around the 15,475. These are guideline areas. These are not to be used as an exact price out here. What happens at these levels, it's areas where price will sit, try to take out, come back and test. If it tests and move to the upside, just tells you where the next logical area of horizontal support and or resistance is out here. Now, when those come together, where you've got some diagonal levels of support and resistance, much like we saw here on Uncle Ben Bernanke Day, as that was on December the 18th out there. Price moved right down into that rising price channel. Now, that had been established just as these primary trading range boundary lines had been established as well. You can see you had really an intersection down there. Now, Price is traveling at about $16,389. Look, for, as I mentioned, a pullback here, just a normal pullback in the marketplace to do the 0.618 retracement, it's a big number because you're coming down from the low here. I'm using the December 18th low all the way up to the high that was put in on New Year's Eve out here. And that 0.618 level right around the 16,051. You're at 16,400 right now. So what's that, 400 plus points? That would be a big move to the downside. What I do expect that we're seeing here, at the moment, we're seeing nothing more than a nice little counter-trend rally out here. We'll see if it can extend beyond that. But today's session is very, very important after yesterday's sell-off inside the marketplace out there. So there's our levels of support and resistance. If we see price move down below the 16,389 level, first let's take a look at where could price bounce to in this, in B, just the normal, B setting up the B to a C of an A to B equals CD down. Well, you'd come and take a look at the high from New Year's Eve. You'd come all the way down to the low that was put in here this morning at 3:30. The 0.618 level is 16,462. So expect 16,462, 465, somewhere right around there to be a decent area of resistance. We'll see if it can hold through that area. If that doesn't hold, then you're looking at about 16,496. Now, earlier I had mentioned when I was taking a look at putting that diagonal, the price channels out there, that as price was pushing through through this area right around the time frame in December 15th, likely we were going to see, using the 14-period relative strength indicator, we were likely going to see that price was moving into the oversold level. So I'm going to put that on my screen here right now. And most certainly, that's what we saw. I'm going to blow it up on my screen just a bit. So, and as price was breaking that rising price channel, here's the interesting thing out here. And this is why, if we take a look at this tool here, which is really one of the most fabulous tools out here for helping to identify whether a push lower is real, whether a push higher is real out here. As the price broke through that price channel, and this took place on December 15th at about, 11:30 in, because it's a 120-minute chart that we're looking at on my screen. At 11:30 in the morning, it was doing, in the evening, I should say, it was doing it on what? On less relative strength compared to the push down into that rising price channel that took place at 7:30 on December the 2nd. So if you take a look at that, we had price was actually moving down. As you can see, I'll just draw a line here. I'll go ahead and I'll make it nice, big, and bold for you so that you can see that. So you had price moving down, and if we take a look at the RSI, you can go back quite a ways here and just simply see that you had a rising relative strength. That meant that it had more strength than it did weakness, and as price was moving lower out there, so I meant to make that a black line out there so it'd be a little bit easier for you to follow along on the TigerTV. So there's your divergence pattern that was out there. Price promptly got back inside that rising price channel and then continued its move higher out here. So that is, now if we take a look at what is it that we've got now inside of the marketplace, well, to a certain extent, you also have the same kind of a pattern out here as the Dow was making its high, not to a certain extent, to the real extent. And you come all the way back here to the highest RSI reading. That takes you into about 5:30 in the afternoon on December 26th. So the day after Christmas out here, price goes up into New Year's Eve, makes a higher high. Let's do this here. Let's go ahead and make that a nice big line out there. So there's your higher high from a price standpoint. If we go from that highest high on that 14-period RSI down to really the high that came in on New Year's Eve out there, what are we going to see? We're going to see a divergent pattern. Let's go ahead. Let's make that black. Let's go ahead and make it thick out here. So there's your divergent pattern. And then you truly got your reversal signal when the market opened up and it gapped down yesterday. So you've got this price relative strength divergent pattern. Now look, as price was moving down here at 3:30 this morning, what was it doing? It was getting where? Into the oversold condition. So what we're seeing here right now is normal. It is a normal move to see this little bounce to work off that oversold condition on the daily chart. Now, if, in fact, this high gets taken out, the high from New Year's Eve out there, then this pattern will have failed. This price relative strength pattern will have failed, and that'll be an important message. Just as important, if that is going on, then likely at the same time what we're going to see is we're going to see the island reversal. We're going to see all the folks that were stranded here inside of the New York Stock Exchange on New Year's Eve. We'll see a boat going back to pick them up. And if, in fact, the New York Stock Exchange is able to get above that December 31st high out there, which is 10,406 406.77. That will be an important message, and it'll be an important message from a couple of different standpoints. Number one, from the standpoint that this is the most bearish reversal signal that you can get. And if you see price close above that, that just tells you how gosh darn strong. Can I say gosh darn on the air? I guess so. How gosh darn strong the market truly is out here if, in fact, that pattern is able to be taken out. That's what it would be doing on the daily chart out here. So you got a daily reversal signal. It's a big one. Until those passengers are stranded, it carries with it a connotation of a very bearish pattern at all-time highs out there. Again, if there's enough strength in the market to go out there, not only rescue those passengers, but take them over, the other strength of that message is the following. Let's go put up the monthly chart out here. And if I put the monthly chart on my screen, what we're going to do is we're going to go up to the all-time swing point high. That was October 31st of 2007 out there, and that was at that 10,387.17. Now, this is a little subtle here. We'll make this little red line going across my screen out here. But what we actually had happen out here, I'll get it out. What we had happen on December 31st, we had a close at 10,406.77. Guess what? It was a close above an old resistance line, even by just a nair, even by just a small amount. And if in the month of January, because now what we can see is that level has been tested. And so if there's a close back above that area, folks, that sets up about a 5,900-point move, I believe. That's a consolidation breakout inside of the New York Stock Exchange. Remember, the New York Stock Exchange chart is the only index chart that has not broken its consolidation level. And this consolidation takes us back into the 2002 time frame. It was trading down around the 4,500, 4,452 to be exact in the month of October of 2002 out here. But we'll just use 4,500, and we'll use 10,500. We'll just use that 10,500 as the upper extreme here. That's the October high. So 10,005 minus 45? I guess that's 6,000 points. That's at 5,900 points. So that would be a consolidation breakout, much like we have seen here inside of the S&P 500. If we take a look at the S&P 500, it's well above, obviously, its consolidation breakout here. That's what is suggesting that it wants to travel eventually to the 2350 area here, because it broke that long-term, that 16-year, 800-point consolidation. But the New York Stock Exchange, it's got a doozy out there of a consolidation. So very important. But, of course, what we have seen thus far in the market is some very significant reversal patterns. At the top, we've got the Euro-US dollar. I'm sorry, the Euro-Yen currency pair. If we go take a look at the daily chart on that. So we're just really trying to set things up here. Well, these are the indexes, but let's take a look at the Euro. Let's take a look at my favorite currency pair. Give me a moment here to do that. Pull that back. Do I have the right thing? Yeah, we've got the Euro Japanese yen. So take a look at this. So you can see we've got some real divergence this morning. This is trading at its session lows, and we've got the Dow up 49 points out here. So that is just another indication that unless this currency pair has come unbuckled, and I don't believe that it has. At least it hasn't as of yet. This is saying, guess what? Nothing more than a counter-trend bounce that is going on inside the marketplace. Now, the Euro-Yen here, you can see it really broke through its last significant, what I'll call its last significant stand from a bullish standpoint, which was December 27. Now, this was after completing the 1 to 2, A to B equals CD to the upside. And as you know from reading The Art of Timing the Trade out there, when you do a 1 to 2, A to B equals CD, oftentimes you're going to do something else. Sometimes that could be a move sideways. Well, forget that when it comes to the Euro Japanese yen. It's head sideways, schmideways out here. It's moving lower. The dead cat bounce 140.14 is its first target out here. But the way that it's come off of that high, I would have to say 136.73 is more likely the range. We got to take things one step at a time out here. Of course, it was in the extreme over bought condition, so it does make sense for that currency pair to work its way off. And no bullish reversal signal, at least on the daily chart out here, and it's really suggesting that this is just nothing more than a little counter-trend rally. And what we want to be paying attention to today is this a rally that gets sold, because you put that piece of information along with the island reversal out there, along with this currency pair moving lower. You know, volume yesterday, if we take a look at the ETFs, really not too bad out here. It wasn't anything to really write home about. In the case of the Dow, if you take a look at it, down, yes, with some volume, 9.2 million shares after making a high on, New Year's Eve. We're going to use that as the benchmark, 5.6 million shares. In only counted as 5.6 million shares? I don't think so. Plus, we've got some major volume out here inside of the Dow Diamonds on December the 18th, and that high is at 161.79. So, yeah, you had some increasing volume on the way down, but it's not exactly like you had a total blowout out there. That's at least the way that I'm looking at the volume from yesterday. If you take a look at the volume from the Qs, probably even gives you a better picture out here. If you take a look at the Qs, all the Qs did yesterday was move down into a sign of strength. Sign of strength was that gap up that took place on December 23rd. So let's compare a holiday to a holiday. Well, that was a gap up with 28 million shares, and yesterday it moved lower with, 29 million shares? That's not exactly what I would say volume coming out really not a big deal. And then you take a look at really the trading session from December 20th. Heck, that had 40 million shares inside of the Qs out there. So it's not as if we saw the hugest signal. So this is going to be very subtle with regard to the roll, if we are seeing a roll in the marketplace. That's why we've got to really pay attention to some of these other patterns out here. If we take a look at the IWM, that has been really the weak link out here. That has provided the Russell 2000 index, I should say, has really provided the most significant reversal patterns out here. And yesterday, the Russell 2000 down with volume of about 44 million shares, but that was going into 48 million shares from December 20th out here. So it was moving down into a breakout. I don't call it a breakout. Let's compare the up volume candle that it was moving into, and it wasn't exactly as if the IWM was just that impressive. Now you got to take it. It's all relative, right? It was a holiday session. It was a light trading session. So if you want to give some extra weight to that volume, well, then that would make some sense. If you take a look at the SPYs, see what they were doing. They were down with 119 million shares out there, but really they're coming into 197 million from December 20th out there, as well as on December 18th, 234 million. So it's not exactly like it was volume coming out I don't know what the expression is. I don't really have an expression for it. Now, haven't spoken of Goldilocks or silver, so let's go do that. Let's go take a look at gold, silver, light sweet crude. Let's go see what they're doing here this morning. You got Goldilocks trading out at a price level of, where is it? 1,230 even Steven. So it's up about $5 this morning. If we take a look at the daily chart here for gold, this is the continuous contract, and the number that we're really paying attention to, the number I'm paying attention to today, is the December 19th high, and that's at 1226. You're at 1230, so you're above that level, but you didn't manage to close above it yesterday. A lot of time left in today's trading session out here. 877-927-6648. Dow's up 55. S&P is up 5. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 53 points. S&P is up 4 right now. And if you are caught in the storm out there, just stay in, stay warm, stay tuned to TFNN all day. Up next, we got the Nadex Bull Bear Binary Option Hour, then Basil Chapman. Just a full lineup for you the entire day. Grab a nice book, read a book, stay warm. No reason to venture out and create some problems out there. I understand it's pretty darn frigid out there. I would say come down to Florida and visit us, but I think most of the planes are grounded. Now, if we take a look at something that may not be grounded, that would be high-ho silver. If we take a look at silver right now, it is trading above the rising, the descending price channel out here. Now, that is important, and, traders around the world, it's showing up on their screens, and so it's starting to garner attention out there. I can guarantee you that. Maybe won't do too much here today, but it's going to garner attention. We want to be paying attention. We did see silver break above this descending price channel, lasted for about 5 days, and that was back in October 23rd through the 31st out there, and then it ducked back inside that descending price channel. A break above this would be real. how do I say this? A break above this would be real. I would say it's really important to be paying attention to it right now. Silver giving us the best signal here of a potential breakout. If it ducks its head back in there, now price yesterday, as you can see, where it closed, right on that descending price channel, or just slightly below that. Kind of interesting how that works, right? So we have a lot of time left in today's trading session. Just something, an additional signal to be paying attention to. Boy, light sweet crude, I had mentioned on the show here that we were long light sweet crude for one day, and it was then the following day probably we went long on a Friday, and then over the weekend I took a look at the CFTC commitment of traders data, realized that the large commercials were taking a very large net short position out there. So I went and closed out that long trade, broke even, was just waiting for a signal. Well, we got that signal. It's just simply that was a ship that really took off. That first signal that came in here was the break of its rising price channel. That took place on December 30th out here. Boy, yesterday's move down with some force, 113,000 contracts. Behind the move, nice wide-ranging bar to the downside. Prices now, and you can see this is potentially an A to B equals CD down, and we've had an explosion off of the C point. At a minimum, the $93 level ought to be tested. That's a big primary trading range boundary line inside of light sweet crude out here, but if it can get through the B point of the A to B equals CD down, that is the 91.77 level. It's got 160,000 contracts there. It's November 27th. That'll set up your 1-to-1. That takes you into the $88, but that explosive move right now, the way that we're looking at it, says maybe more like about $85, $84 to $85, and that would be nice for all of us at the pump. $85 would take you all the way back into the lows from April of 2013, so it's not out of the question for that, in fact, to take place in light sweet crude. It was a good job of calling it, and it was a bad job of trading it, Terry, out there. Should have taken the trade, and there will be another trade out there. If we take a look at bonds right now here, bonds just continue to move sideways. I just don't see a lot here other than, if you take a look at the trend line here. Now, here's what we see in bonds. Here's the daily chart. This is the 30-year Treasury, and the 30-year Treasury was trading in a consolidation range from August of 2011 and finally broke it in July of 2013. Pretty long consolidation range. Your measured move inside the 30-year Treasury takes you down to about the 117. Bonds would have to get inside of the consolidation to say it was a false breakout. That would be in the 135 level or 128. I don't see that happening. The first thing bonds need to do is they need to break this little trend line coming back to May 6, 2013. Folks, it's been an awesome beginning of our year. Let's make it the most incredible, the best, extraordinary year that each of us can have out there. Be safe this weekend. Stay in if you're up in the blizzard. Look forward to seeing you Monday morning. Take care, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.